Okay, being 5:15, I'll call the Finance Personnel Committee meeting to order. Please stand for the pledge of allegiance.
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all.
For a motion to adopt the agenda.
So moved.
Second. Motion made by Mike, seconded by Tim. All those in favor?
Aye.
Opposed? Motion carried. Approval of the August 6th finance meeting and the August 14th special finance meeting.
Move to approve the minutes with one adjustment to the August 14th minutes. Item number 2 should be removed. It looks like it was just a carryover from the August 6th minutes. There was I discussed it with Judy, but yeah, item number 2 was a carryover, copy paste from August 6th minutes. So with that correction. Second.
Okay, motion made by John, seconded by Tim. All those in favor?
Aye.
Opposed? Motion carried. Public comment? Seeing none, we'll move on to the health insurance presentation. Judy?
All right. So I would like to introduce to you, everyone should have received the 25-26 employee benefits for the city and the utilities under separate cover. Actually came out yesterday, but then we also gave you a hard copy tonight, just in case you didn't receive that or it didn't come through. So who we have with us tonight is Jeff is with USI, and he's our employee benefit consultant. And he will be going through the majority of the slides up on the screen. And then we also have Travis with Network Health joining us tonight. So I'm thinking Jeff will want to go through the screen and or the presentation, and then as he does that, if you have questions as he's going through it, go ahead and do that. But I'll turn it over to you guys.
Okay, thank you, Judy. First off, thank you for allowing me to come to the meeting and present the different insurance options for this year. I'm going to try to keep it high level, but it is your meeting. So if you have questions on any of this, feel free to stop me and ask me questions. I'm happy to go into detail for you. If we advance the slides, we can see what happened. So United Healthcare came to us with an initial renewal of 45%, which was pretty shocking considering how they underwrote your group last year. We got engaged with management at UHC to negotiate that. I told them to cut it in half and they would have a chance to retain your business. They politely declined and reduced their initial renewal all the way down to 42%. So that was as low as they were willing to go. As we were trying to negotiate that, we also did go to market to look at different solutions for you, and we'll talk about those in a minute. But the factors as to how did we get at a renewal increase that's north of 40%, we look at loss ratios, and the loss ratio is a very simple mathematical equation of premium in versus claims out. So our loss ratio from 1024 to 525 was 133.6%. So for every dollar you gave the insurance company, they're telling us they paid out $1.33. So the business was not profitable. That's what the loss ratios mean. The target loss ratio on the carrier side, depending on who you talk to, is between 80 and 85%. The reason it's not 100% is they want to reserve some monies for their administrative costs, claim filing fees, PPO access fees, things like that. When we looked at it, your current loss ratio of 133.6 was 13% higher than it was in the prior period when you were with a different carrier. Your loss ratio for that time period was 120%. So what we can see is that utilization was up and the cost of claims for your group went up. Any questions on that? Next slide. So this is just a visual representation of your current plans versus your renewal plans with UHC. Your current is on the left. You can see enrollment, you can see premiums, you can see plan design. On the right is their renewal proposal at that 45%. One thing to keep your eye on, the IRS keeps having different regulations regarding high deductible health plans and their status as being embedded or non-embedded, which is a difference in how deductibles work. So your deductible for your low plan was $3,200 for a single, 2 times for family. At renewal, that needs to kick up to be IRS compliant. So that plan just went to $3,300 or $6,600 for their renewal proposal. Outside of that, all the benefits remain the same, 45%. I looked at a bunch of options that they sent over to me to review and just didn't find any of them that could get that renewal increase to a manageable level. Next. So we talked a little bit about loss ratios. This is the only reporting that UHC gives us for claims. It's in your report too. What we can see is the members per month, the subscribers, the premium that went in versus the medical and pharmacy claims that went out. We can just see their loss ratio represented there at the end. Judy and I had some fun looking at that because what sticks out is an 18.9% loss ratio, which for a month is great. But we have to understand that that's going to be for February, which means those are really claims that were incurred in January and just didn't process through the claim systems until February. So what happens is people have deductibles that need to be met at that time. So our loss ratios are always going to be lower early in the year than later in the year. But that was the only claim reporting that we got from UHC that shows kind of your aggregate totals. Next. So we did go out to quote. We went everywhere in the market that will quote insurance. We had 2 carriers that actually submitted proposals back to us. 7 of them declined. The declinations, you can read them there. A few of them are fully insured carriers. Some of them are partially self-funded carriers. But really, we had a bunch of carriers that looked at the group and said, this isn't a risk that we want to invest in. However, we did secure 2 quotes that came in under UHC. Network Health, represented here today by Travis, gave us a fully insured proposal on their HMO paper that's a 24.3% increase. Those are for very similar benefits, and we'll go over those in a moment. We also received quotes from one of our captive partners. A captive is a conglomerate that writes stop loss. So what they do is they take smaller groups, write them into one big group to spread risk out. It's a very good way to self-fund if we want to look at that in the future because it spreads risk out nicely. When you do a self-funded proposal, you have a lot of variable costs and claims because if you go self-funded, you are going to be paying claims and not premiums. With that comes risk. So their proposal came to us with a 23.4% increase from current for the same plan designs, but those are expected costs. That's an underwriter saying, we believe you're going to run here, okay? Aggregate costs is, but we could be wrong. So if we're wrong, here is our aggregate total. That's your maximum cost that you could ever pay within the plan year. So we have 2 different numbers to look at, and you can see that there's a pretty big discrepancy in numbers there. Fully insured has no risk to it, which is why our endorsement is for Network Health here tonight. But we did also get a pretty good quote coming from our captive partner. I know that's a very high level on how self-funding in the captive works. Do you have any questions on that?
Not on that, but why do we only use 5 months?
That's
6 months out of a full year of data to tell me that it's 133%. And I can clearly see that the next month will probably be a lot less like.
Well, we never know what the next month is going to be. However, your point to reporting is very valid. So what we're trying to do is we're looking at a 1/1 renewal and we're sitting here on 9/10 today. The claims system is going to have a lag on it between 30 and 60 days. So we always work backwards from that, which is why we have minimal data. The best thing to do to try to get predictable and move forward is to have consistency of carrier for over 2 years. So we always have a rolling 24 months worth of data. Being a new carrier and being the renewal is 1/1 and we're trying to finalize it now, it's limited. You will like it though in a minute. We do have just a little bit more data that talks about where people were getting service. And that paints a little bit of a picture as well. But you're right, it is a short plan year for data. Okay, so this is just a visual representation of an overview of spreadsheets that I built for the group that talks about why carriers didn't quote as rates being uncompetitive. Self-fund health has a very different model, but I do like it a lot. They just rely on direct primary care, a brick and mortar building being next to a group. They don't have that built in New London, so they decided to not quote. However, you can see we have our in-force premium, our renewal premium, our negotiated premium. We have this Pareto self-funded captive illustrated there as to what those costs would be. And then we have the HMO from Network Healthcare, as well as a point of service plan. We believe strongly in the HMO because it is going to be less expensive. The taxation of the plans through our government has a little bit to do with that. But it is a very strong contract. We'll go over that in a moment. Now we get more visual representations of what the spreadsheets look like. On the left is going to be your renewal plan and renewal rates from United Healthcare. On the right is going to be Network Health, HMO, and all of these benchmark back to your current plan. So if you see increase or decrease, that's from your current plan, not from each other. It all goes back to your current plan cost. The only thing to really note here is if you look at Network Health on the first silo, their plan has a $3,500 single deductible 2 times for family versus a $3,300 deductible 2 times per family. The reason we quoted it that way is if we're going to be there, we would rather just make sure we have a couple years before we have to keep bumping that deductible up. That's what made the most sense. But outside of that, the plan designs are the same. One big difference on the features is our line that says OON benefit. That stands for out of network. Right now with United Healthcare, you are on a point of service plan that has in and out of network benefits. With Network Health, it is an HMO. There are no out of network benefits. That's a difference. We'll go over that in a moment too. So Network Health, we define as a fully insured carrier, but it's a quote, narrow network plan, which means unlike Anthem, unlike UHC, they can't say that they contract with every hospital provider system in our state of Wisconsin. That's not the way it works. The biggest change that you can see up there is that Aurora is going to be out of network. However, Travis will chime in at the end of this slide to talk a little bit more about network. But the relationship with Aurora and Network Health may be changing in the very near future. It's interesting too that while Aurora is considered out of network, if you have an emergency room where you have to go to an ER, Aurora is still covered at 100%. So it's not like you can never go to Aurora. If it's not your decision, but somebody sends you to Aurora, that's emergency, that's going to be covered at 100%. If you're seeking care for hips, knees, backs, cough, sneezing, allergies, whatever, and you go to Aurora, there is no insurance coverage for that with this plan. The other out-of-network providers that are just going to pop up would be Mayo and UW-Madison. We have some provider utilization we'll go over. I didn't see Mayo or UW was utilized by any of your members, but Aurora was, and we'll take a look at that. So leads a question, what providers are going to be in? ThedaCare is the main anchor partner with Network Health. We can see that that's where the majority of your people are seeking service today. Ascension is very high up on that list as well. Bellin, Children's Hospital, and Prevea. On top of that, they have a lot of other access points, but here locally, those are the big ones that are available to you. Travis, did you want to talk a little bit about Network?
Sure, absolutely. So first of all, thank you for the invites, including me here. So we were excited to see the RFP when it came in. So we've had a recent, obviously, ownership change with Theda purchasing Network Health about a year ago. So this is an area that we had a lot of membership with about 5 to 7 years ago. Unfortunately, we had lost that relationship with Theda, lost that membership, and now we're looking to gain that relationship back. So again, this is hoping for a long-term relationship. This is not something we're looking at 1 year. We're looking at a partnership with you and anybody else in the area as well. So Network Health, we're certainly not new. We've been around for over 40 years. We're one of the few provider-owned systems. So what's nice about that is any money you spend, you know where it's going, okay? Fortunately, when you're working with the UHCs, the Robins, that money's leaving the state, okay? When you're working with Network Health, all of that is staying here locally. We work in the community, we volunteer in the community, we're all over the community, and that's really what we're all about. I think the biggest thing that I love about working with us is the customer service that you're gonna see. All the customer service, all the call centers are right there in Menasha. All right. So you know who you're calling. You're not on a hold. We answer the call in 2 seconds. If you're having an issue, you can certainly get that resolved within a matter of minutes. So we always joke that we're one of the few carriers that can pronounce Kakana, Oconomowoc, Shawano. And that really does mean a lot to our members. So again, thanks for the invite, and hopefully this is something we can work long-term with you guys on, so.
If I can dovetail that to just one other little point, the relationship between Theta and Network being combined is interesting. It's pretty unique to the market too. So when we look at what you're spending on claims at these organizations like Theta or Aurora, hospitals like that, it's all based on contracts behind the scenes that the insurance carriers have with the hospital systems. So if Theta and Network own each other, do you think they're giving themselves the best pricing in the industry? Or are they giving best pricing Theta Care to United Healthcare or Anthem or some of these other carriers? Now, I haven't seen a claim report where I can definitively tell you their pricing at Theta is going to be better than UHC, but it's a pretty easy conclusion to come to. So we might see our loss ratio improve because of the relationship between Theta and Network Health. That was one of the exciting pieces. Next slide. Okay, so this is the one I alluded to before. We are given very high level data on your group, nothing specific to a person, but this is what UHC gave us to show us where people are seeking care. We can see that by claim amount, Aurora has the highest claim spend in the group, which is not ideal if we're going to be moving to a carrier that excludes Aurora. However, it was one person. One person went to Aurora, and it was in Muskego. So as we talk about that claim, we're not sure who it is. We're not sure of the situation around it, but it could be likely that it was an emergency where they were traveling and had an emergency and needed some severe help and were near that Aurora facility. So though it looks daunting, if we look at the amount that claim was, I think it's like 285,000 plus, it was all generated by one person. So it's not like we have half your population going to Aurora. After that, you can see there's a whole lot of Theta in there. And if you look at the number of claimants, those are the number of people that are going there. So we can see we have good coverage there. Ascension is going to be a higher provider as well. But we can see Theta just keeps coming up. How is Aspirus in your network, Travis?
At this point, they are not in our network. So,
Okay.
But again, that would be accessed through the point of service plan.
Okay, so we see that too here with Aspirus. It was one person. And again, we don't know the situation that they were involved in. So when we look at the big picture, we can see that there are claims dollars going to out-of-network providers if we're going to move, but the number of people seeking care is very low, which is a good thing for the group. Any questions on that? Okay, next. So with any change, there comes challenges. We're seeing here that we've got a better financial model, comes without risk, but what are the little things that we're going to run into? Well, dependent coverage for out of area people is going to be something that comes up, especially as we talk to the employees. So Network does have a program where if you are outside of the service area, such as college students, there is a very simple form that you fill out that makes sure that you can access care when you need it. The next slide is going to be a copy of that form. It's very simple for you to see. But this is a big deal. Your employees are going to ask, and I'm not going to do that program justice, So I'll have Travis talk about that for a moment.
You bet. So we partner with a wrap network called First Health. So anybody that is outside of that 27 county service area, that is the broad network access that they would have. So we certainly know that employees have children that are going to school outside of the area. And we are perfectly fine with that. So all we require is that they fill out a one-page sheet. So during the time of implementation, we'll have a team come in, do an open enrollment meeting, and probably bring this up. You might have 1 or 2, maybe 3 employees that will fit this bill. But we do have a solution and an answer for those employees that have that. So they will be treated as in-network, and all the claims will claim and file as they were in-network at that particular point. So.
And I too can talk just a moment about First Health as a wrap network. This isn't something that you're going to be able to access if you're within that service area. These are for people that are outside. So college age students, people that are on vacation, people who are traveling. The First Health wrap network is the #1 used wrap network that's out there. It's very expensive. So your people are going to have plenty of places to go should they be traveling or have kids in school somewhere. The other interesting feature is because of the Affordable Care Act going in, when you go to emergency care where you don't have a choice, they just take you, it's covered at 100%. So even on your HMO plan, if you're traveling in Florida and you have an emergency situation, need to get to the emergency room, yeah, First Health is there for you, but your benefits are going to be covered as an in-network level benefit because of it being coded as emergency care. So this is just another protection for people that are traveling. And it's another way to make sure that if we're traveling somewhere and we don't have a choice, but we end up at Aurora, those claims are going to process in network so long as it was coded as emergency care. So it is another protection on your plan. Questions on those little features?
You are gonna have, you're going to have to tell them voted as emergency care.
So typically what we do ask is obviously receive treatment, and whenever you are to the point where you are comfortable, all we ask is that you give our customer service line a call. That's it. And just say, hey, here's the situation. I was on vacation. Here's what happened. And then we'll make sure to flag that in the system. That is all we ask of you in that situation. So.
Good enough. Next slide, please. There was our form. Okay, so the other thing that was an issue last year with United Healthcare as well is deductible carryover credit. So we are, what, a 10/1 effective date, Judy?
Correct.
And our deductibles run on the calendar year, but our plan renews on 10-year. So if we just install Network Health and they put in their plan design, they don't know that your members have met their deductibles. We don't want to charge them 2 deductibles. What we need to do is we need to order a deductible and out-of-pocket report from United Healthcare and get it to Network Health so Network can load it into their system to make sure that all of your employees get the credit that they deserve for that deductible plan year. It all sounds really simple, but it takes time. Question came from the gentleman down here before, why is there so little data? One of the reasons is claims need to run out. We need to allow for time. That's what needs to happen here on this deductible and out-of-pocket report as well. I can't order it tomorrow because it's going to be 45 days behind because claims may have been incurred, but they're not paid. So they're not showing up in the system. So what we're going to do is we're going to wait between 30 and 45 days after 10/1 to get that report from United Healthcare to get loaded into the system. We're going to coach your employees on what this means if I've met my deductible and now what is this coming in? We're going to coach them on how to get over that, but really I stress patience is what's going to be needed. And this was an issue last year, so we're going to make sure at open enrollment, we educate the employees over and over again on this, not only from what the process is going to be, but where to go to get help so it doesn't end up on Judy's desk. Here at USI, we've got a ton of employees here in the state. We're happy to help, and we want to make sure your employees know about that help. But that will be a very, very big thing. moving forward too, Network Health was gracious enough to give us a 15-month contract. Usual contracts, you get are 12 months. So with this contract, our next renewal will be on 1/1 of 2027, which means if you have to make carrier changes in the future, your plan year will coincide with your deductible year, so we don't need to worry about deductible credits and out-of-pocket credits again. Everything becomes easier. And really, to get our offer to hold, originally they quoted 12 months. Travis got their underwriters to hold those rates for the additional 3. That's a pretty big win.
Wouldn't that be an increase in the current rate though for 3 months?
No,
Cause if you just waited out until January, you'd be with your other provider, right? So then you start fresh in January instead of 15 months?
well, we'll have a 15-month contract to start. And then moving forward on 1/1 of 27, our contract will go to a 12-month.
I'm just saying, like, you're on the plan right now. It goes till January, right?
But no, it
No,
ends on 10/1,
it
and the
does,
only
yeah.
way that we would stay, they would keep us is at a
Okay.
43% increase starting 10/1. They would have kept us till the end of the year, but it would have cost us.
It would have been at that 43%.
Yes, that's correct.
Yeah, I'm sorry I didn't understand your question, but that was an option we looked at, is taking the UHC renewal for a couple months and then seeing if we can put in Network Health. Financially, Network came through to make sure that our rates didn't go up. So this became a really wonderful feature to get.
When you talked about the carryover for the, from 10/1 to 12/1 of the deductible, I assume it also includes your out-of-pocket limits, like if somebody's met it, that
Yes,
would also be included? Okay,
yes,
thank you,
very good question. Yeah, it's a deductible and out-of-pocket credit.
thank you.
Again, UHC is gonna run it and they're gonna take it in their system. We're gonna follow up with them. Once they run the report, they physically email it into our contact at Network. They don't let us see it. A lot of PHI on there. And then they'll let us know, Network will, when those credits have been applied. But once that report comes into Network, days, Travis?
24 hours or less. It's an easy upload.
And last year, we ran the report at 30 days last year. So maybe we feel comfortable doing it 30 days again this year. Potentially it could be 45, but we're aiming at 30. Next. Okay, so the recommendation from USI is to accept the Network HMO offer. Travis was quick to point out to me too, this is not like the old HMOs where you had gatekeepers and had to get referrals. There are no referrals needed for any of these services. Again, these contracts are owned by Network Health. They're not rented from somewhere else, so we're pretty excited about that. And then with the exclamation point to get the 15-month rate guarantee is very good. Travis, is there anything you want to add about how your HMO works?
Outside of that, no, I mean, it's as streamlined as you can get, very similar to your current UHC. So you should not see any additional work, any additional referrals, any additional authorization. None of that will be anything that you haven't seen currently. So.
He said a word that triggered my mind though. He said authorization. So one thing here too that employees are going to see is pharmacy is going to change. Okay, if you're paying $60 for a drug today, you could be paying 40 with Network Health. You could be paying 90. We don't know. All these different prescription formularies are different. We will let your employees know about that. If they're on a drug that needed prior authorization with United Healthcare, that doesn't just flow over to Network Health. The doctor is going to have to resubmit everything to Network. So it's like it's a clean start. Your employees were used to this from the change last year as well. It's nothing different from what they went through last year, but it is something that we'll focus on with the education of your employees.
One more thing I just thought of, we talked about there would be no Aurora included in this packet in your proposal, or that Aspiris. So what happens if them 2 cases that we have there, we don't know if they're ongoing cases? Would they still be covered? Like if they were still, say if that was still an open claim, would you cover that for them 2 months?
That's a great question. So due to the No Surprise Act, they have a 90-day continuity of care. That's a standard. So What happens is if they decide to move over to the HMO, they'll have 90 days to work with a case manager at our Network Health directly. That case manager will work with that employee's doctor directly to make sure that there is a safe transition made. So typically in 90 days or less, they'll move them over to, more than likely, they'll probably move them to like a freighted hospital. If the physician deems that 90 days is not the best interest of that employee, we'll extend that for them. So absolutely. So we're not gonna pull the rug out from that employee by any means. We're gonna make sure that care is continued to the fullest. So.
And that is
it's
a great question. I have notes on that too, to where when it comes to employee education, open enrollment, we will make sure we highlight that as well.
Yeah, thank you.
So again, recommendation is for Network Health. Excited about some of their features there. I will say too, that the Pareto captive, which was partially self-funded, did look competitive. It's just that it comes with risk, and the difference is over $150,000. Now, you go self-funded, you could run better than expected too. But our loss ratios have been high. We feel that due to the gambling nature of being self-funded, Network Health is the best choice for right now. And again, can always revisit self-funding if the loss ratio improves. What I like to is hopefully we get more continuity of data that'll help us see what self-funding can look like in the future. So these are just some plan highlights. We're looking here at your low plan on the left, your high plan on the right. You can see we've just kind of more or less illustrated that the $3,200 deductible on your low plan is going to go to $3,500. And then the deductibles are 2 times per family. Outside of that, there's no changes from your current plan design at all. We can see the next page 2 talks about pharmacy. No changes to pharmacy because all the pharmacy, you pay full cost of those drugs underneath your deductible. Once deductible's met, plan pays 100%. So there's no change in how the insurance works. I explained prior to the change will come that these drugs may have different pricing for better or worse. We don't know what the formulary is going to look like for all the drugs. We wanted to put this out here to illustrate premiums today for 24 and 25 with UHC compared to what premiums for employees will be in 25 and 26. Those are going to be paycheck premiums as well. I believe it's bi-weekly. So you can see the differences that are going to be hitting paychecks. Furthermore, Judy and I discussed the health savings account contributions. This year, it's going to $1,200 for a single, $2,900 for a family. On the $3,500 plan, on the 5,000, it's $2,200 or $4,900. And if people go in and get their primary care engagement, their wellness taken care of, $500 can be added to both of those amounts. But we want to get them engaged with wellness activities. That's the goal of the program.
So to be clear with that, our contributions in the past included the $500. So everybody knows we pulled the $500 out to make it an incentive to have our employees go to the primary health care for their wellness check. So if you go to get your wellness check, your contribution is the same.
Yes. And this is pretty simple too, because wellness is covered at 100% on the plan. Now, there might be little bills that come in because a doctor runs a few extra tests. But for the most part, it's going to be a very inexpensive visit that can get them an extra $500. And that will be something that's communicated early and often to the employees at the meetings.
So the contribution, just to reiterate, is the same as last year, but the deductible went up. So even on this side, the employee is going to see an increase in the cost.
Okay, that was the tough part. Are there any questions on medical? Anything that we went over? Any questions about Network Health? Okay, so the last few slides are very simple. Delta Dental came in. This is a decision for you to make as well. They gave us 2 different options. They said, we can keep your rates at current for the next 12 months, no dental increase. This exhibit is showing a 2% increase, but they're willing to give us a 2% increase and lock that rate for 24 months. So dental trend is about 6%, which means costs go up every year by 6% just for dental services. So to get a 2% rate lock for 24 months, I think is a pretty good deal. But you can determine whether you'd like that to be 0 for 12 months and then we take our chances, or if we lock in the 2% for 24. It is important to note though that you do pay 50% of the dental premiums, employees pay the other 50% of dental premiums. Other than that, no plan design changes, no changes to Delta whatsoever. On top of that, vision is a very, very affordable benefit that your employees have. It is IMED and it's administered by Delta Dental as part of their whole package. They're asking for a 2.9% increase on that. And you can see what that does to the rates. And those rates, again, are all 100% paid by the employees. And that concludes the insurance presentation.
Anyone have any more questions about anything about the health, dental, vision?
Now, you said a while back that employees pay about what, 3% of their healthcare, 4%?
4% per paycheck plus the other HSA side.
Is that pretty standard across the state?
Depends on who you talk to. I have some school groups that are going to pay like that. But I would say 4% is a generous benefit if we were to benchmark that compared to all the other public sectors out there.
You kind of have an idea of what averages?
Schools, it's more like 12%. They are going to have some other plans though that are obviously well under that threshold. And then really, it depends on where you are in the state. I work with a lot of municipalities, and it tends to be the farther we get away from Madison and Milwaukee, the higher the contribution percentage by the employer is. And I think it's just because Southeast Wisconsin just really has higher rates.
As a federal employee, I can tell you that these rates sound amazing. Because for us, it's 47%.
Increase.
No, that's our portion. It's not a 4% or a 12%, it's 47. So.
My wife works for a bank that's headquartered in Illinois, and it's, I think, 6.5% for the employee spouse that we're on. And that is a wonderful benefit compared even to what I'm offered at USI as one of the largest insurance brokerage firms in the nation.
Yeah, so that's huge.
For attraction and retention of employees, you have a very good plan. And your HSA contributions are very good as well. I want to say too, Judy, when United Healthcare came in last year, wasn't it everybody except you got a decrease coming out of their paycheck?
Yeah.
Okay. So they got a decrease last year, so a little bit of an increase this year shouldn't cause any panic.
The other thing to keep in mind with the percentage of the premium, it's also with the police department, it's a negotiated point as well. So that's something that if it's a change, it can't be across the board. That's a negotiated point. And it was a negotiated point when the unions were down at the garage too. So that's primarily where that's come from.
So you're saying the city matches what the police department union negotiates?
Right now, to keep it even across the board for all employees, make it fair as of right now.
Did it show how much it was gonna go up for each employee? Did I miss it?
Yep. Was that it?
Is that the
Sorry, you gotta do it.
increase?
So you gotta do a little bit of math, but. Just keep in mind too, that's bi-weekly.
$7 a check. But I wish my insurance would go up $7.
So I guess, if you look at it in dollars and cents for what a max out of pocket is for an employee. The single plan is, so for a single person, if you meet your deductible and you pay through your payroll deduction, it's $2,700 for a single employee. And for a family, it's $5,100. If you take the high deductible plan, the total would get higher and it would be at $3,200 for a single and $6,000.
And to be fair too, your employees can still put money into their HSA if they want, on top of what the employer is already putting in. So if they wanted a pre-tax vehicle, they can add money to their HSA, which will be communicated to them at their meetings.
Right, and the federal government has a maximum on all of that.
Yep.
So we do communicate that to them also, yeah.
Yep.
All right, hearing nothing else, can I get a motion?
Make a motion to accept Network Health, HMO offer.
And then probably to stay with, oh, we gotta decide on the dental too. The Delta Dental, whether you guys wanna go from 0 to 2 or 0% per year or 2% for 2 years.
I'll second it. You need two motions?
I would think you'd do it in 2 motions.
You want to? Okay,
All right, motion been made by John, seconded by Bob for the healthcare plan part of it. All those in favor?
Aye.
Opposed? Motion carried. All right, on to the dental. I would do the 2% for 24 months personally. It's going up 6% a year on average.
For clarity, I can say most of our insured Delta Dental customers are getting about a 6.9 initially, that we're able to bring down to about a 4.5 to a 5.
Still 10%, still
Yeah.
way more. And we don't know the inflation or we don't know what that's gonna go up.
2% is pretty easy. It's a pretty easy bet for 2 years.
Yeah.
Make a motion to renew the dental with Delta Dental with the 2% for a 24-month rate lock.
Second.
Motion been made by John, seconded by Mike. All those in favor?
Aye.
Opposed? Motion carried.
and probably just to stay with Delta Dental for vision. At their current increase of 2 point, I think it's 2.9. Is that what it, yeah.
And you did a motion for that as well now, correct? Yes.
I'll make a motion to stay with Delta Dental for the eye medication. IMED. The 2.9% increase.
Second.
Motion been made by myself, seconded by John. All those in favor?
Aye.
Opposed? Motion carried. All right, thank you guys.
Thank you.
Thank you.
Oh, you guys.
Dreading that. Little budget hearing for Wednesday, October 22nd, 5:15.
Okay, so can everyone check their calendars and make sure that you're available on October 22nd at 5:15? And we do have to have a super majority that night, so just make sure that everybody can make it and that works for you. The other reason that we need to get that meeting in is we have to have 15 days of publication of that budget in the paper. I think it goes on Facebook, ahead of the council meeting of which the budget hearing is at. So what this allows us to do is to be able to, or myself, to present that budget at that budget hearing and give us enough time that we can fit that in to the next council meeting. Because once that happens, just remember, we're getting into November and I have to turn around and get our taxes out. So believe it or not, we have a number of individuals that like to call and ask when they're coming, when is my tax bill coming? So, and statutorily, we have to have that tax bill out by the 15th of December. So we kind of have to start in November and go backwards. And I have to get that information in the paper on Friday to get it in the next Thursday. So there's a lag there too, once the information is approved or the budget is approved. So that's how that works. Just a reminder of that process. So.
We don't need a vote on that, right?
No,
Just a-
just to make sure everyone's aware of the date, that we know, make sure that we're all there.
Okay, move on
And
to,
we can publicize.
move on to the finance director's monthly reports.
Right. So we'll start with the expenditures, and tonight we're looking at through the month of July. So 7 months divided by 12. If we look at it as a percentage, about 58.33 would be a good percentage. So when we're taking a look at the expenditure categories, the ones that are higher insurance, again, we pay most of our insurance at the beginning of the year. We will see this go over 100%, and we actually bill the utilities. They pay us for their portion, so that it'll go over 100%, then it will come back down. And then social services, almost all of that is paid. And also debt service, most of that is paid, but everything else is running currently within budget. I anticipated the police department actually had they had a retirement and a pretty large payout within their budget. So them at 59% right now actually is very good. So we'll see where that all comes in at the end of the year, but I don't see any category that I would say was out of the norm at this time. Any questions on any of those? All right, then we move on to revenues. And we are at July. Special assessments, even though it's a huge percentage, it's just that some of our special assessments are deferred, so we have no idea that we're gonna get that money or we're not gonna get that money. And in dollars and cents, it's $7,000, but you can't budget for something that's deferred because you have zero idea if they're gonna build or not. But usually it's a piece of land where we had put in infrastructure, and then once that land is sold, then we receive our special assessment. So that's how that works. Taxes equivalents come November, December. Property tax, this will be at 100% in August. We did receive that statutorily again by August 15th. So I don't see any red flags as far as the revenue categories are concerned. Any questions on those? Assigned and unassigned fund balance. None of this has changed since last month. If you have any questions on any of these, I will point out to you with the discussion on health insurance that we do have some funds set aside in health insurance. And I plan to continue this, plan to continue to put dollars into this, hopefully as we go through time. So when we have changes within those health insurance increases, we have somewhere to turn revenue side again, when we see these kind of increase, I hope this doesn't continue and is not the norm going into the future. But again, it just gives you a little bit of cushion. As you know, 145,000 is not a lot of money when we're talking health insurance, but at least it's something.
That's the increases, and also then if a single person goes to a family plan. something like
Correct.
that, That's
So
where
those bumps aren't so
Yep.
big within that budgets either. All right. Then the wheel tax. We've collected through July 72,000. We spent 6. So we have about 66,000 left within that budget. We also have 168,000 from the year before, so. We are looking at North Street project, that grant, that has not been paid yet, so. And then we have our bonding, so we're still sitting on the library downtown, House Alcon, Liberty Roads, and then the HVA system over at the senior center is being placed. And any questions on any of the finance information? And I'll move on to my report. So in the month of August, we worked on the insurance renewal. There is a lot of statistical information that Nikki, our payroll person, her and Missy over at the utility have to get together in order to get these moving. And it's continuous questions from one day to the next. You don't know what they're gonna be, but it's a lot of work to go through insurance renewal. April and I finalized the 26 budget, so all of those packets went out to the department heads. That's also a pretty big project that has to be done by April every year. I processed and I calculated the TID developer agreement payouts. Those payouts were due to those developers by the end of August 31st. This is the first payment. Well, we made one payment to one of the developers last year, which was much smaller, but this is the first time that other 2 developers were paid. So just going back to the contract and figuring out what that's supposed to look like, Chad and I worked together and got those out. Submitting the information for the library grant and moving those payments as required by the state. So I'm working on this almost weekly now, as those payments are being made to 8 Pine and then some of the other consulting firms and things of that nature. So taking care of the trust money and moving it in, and then when the state gets the money back, moving that where it needs to go. So the state has regulations of how that money needs to come into a non-interest bearing account. And then I have to turn around and move that money out of that account within 10 days, just so. And then I have the paperwork of cash checks and all those kind of things that I have to get back over to them.
And we've had 2 reimbursements so far, and
Yep,
the third
and
one
working
being
on the
submitted.
third,
so
yeah.
That we are getting money back from the state,
Yeah,
which is good.
correct. But I also have to get, and those are just the grant reimbursement. Well, I also have to work on the non-grant, which is actually a lot more vendors and a lot more paperwork on the other side, but those are moving forward.
So we're looking good with that. There's not any issues. I know there was kind of a little hesitation there for a while.
So far,
Okay,
both
cool.
the submittals that we've sent in have been, and the payments actually came in relatively quick.
Swift,
Good.
yeah,
So,
quite quickly. I was like, ooh, I gotta get that moved.
Yeah.
Yeah,
That's great.
so
Yeah.
the third one
So,
was
yes.
just submitted
payments are all coming in.
last couple days, so, yep.
Yep, got another one going out. What day is it? Thursday, tomorrow. Yep. So I actually moved that money today. Got ready for that payment. I attended a pretty lengthy wastewater treatment, and you guys were all at that meeting where the presentation was made about the wastewater treatment and USDA grant. I provided a lot of financial information for the USDA and what that, information they needed to determine what that grant would look like for the city. Updated the capital projects and equipment list for the meeting tonight, or coming after this meeting, and then completed the final information needed for the state trust fund loans. And we have received those trust funds, and those trust dollars may have been deposited. I did visit with Corey at Edward Jones as part of our 2025 budget. We had $100,000 that was moved into there. So we were just talking about when I'd like to receive payment. when we initially spoke earlier in the year, actually speak 3-4 times a year. I said, let's hold it as long as we can so that we can receive interest dollars on that. So then he asked, you want 100,000 plus the interest? I said, no, we'll roll that money back into the investment. So $100,000 was sent to us. It was quicker than he had anticipated, so that I have already deposited that. And then the interest on those dollars will be going back and reinvested.
I know the stock market's been pretty healthy.
It-
Because it's been growing substantially.
Yes, it has. So it was at 150,000, so we still gained overall, even taking $100,000 on at that time when we talked, and it has, I think, exploded since then. So we had an $50,000 increase even after we took out $100,000 out of the portfolio. So again, we're gonna continue to do, I like to do it at the end of the year like we did. He thought it would take a little longer, so I said, okay, then I'd like to see that in this third quarter, only because we have Oshkosh Street that we're holding funds, trying to get through that project for a year. So we don't have to do any short-term borrowing for that. So I said, I think this year in particular, but next year when I have those funds back within our unassigned fund balance, I will wait till the last second. So again, we're gaining dollars and investment dollars hopefully on those dollars, and we don't know what's gonna, and if it dropped, I would come back to you guys and say, do we still wanna do this? I'm not gonna just do it, especially if we're in that boat. I'm gonna say, okay, so this is where we're at. What do you guys think? And then we'll move forward. But this was easy enough for me to just say, yeah, go ahead and pull it, and then reinvest those dollars. $100,000 back into the portfolio. All right, then I worked on the insurance billing and I have gotten that out to the utility, so that's all I got. Any questions on any of those? Other questions? All right, thank you.
All right, any questions? I entertain a motion to adjourn.
So moved.
Second.
Mike, second by Tim. All those in favor?